नहीं. Acha. Now let us have a quick recap. If I just talk about the transfer price, understand that is a divisional transfer price. Just understand this, huh? This chapter. Now understand it's a master summary, huh? I can divide this into 4 parts. First of all, understand this. The first is what is transfer price, why it is calculated, how it is calculated, then international transfer pricing. Okay. Now if I talk about what is transfer price, I can say that there is division A, there is division B, and there is a transfer which is taking place. So we can say these are divisions, division A and division B, and the transfer is taking place between these two divisions. So what should be the price at which it should happen? That is known as divisional transfer price. First of all, meaning I have told you. Acha. Sir, why transfer pricing is important? Because we will give targets to division A and B to earn higher profits. If division A earns higher profit and division B earns higher profit, automatically company's profit will increase. So now that is why we will give the targets, and once this is given, and we will tell them you are a profit center. If you earn profit, higher profit, we will give you 5% or 10%, X% as a commission also. So they will try to increase the divisional profit now, as if it is their own company. That small division is, they own that division. They will try to increase the profit of the division, which will benefit the company at the end. So for the purpose of, we can say that motivation. So that motivation will be there. There is increase in motivation, divisional profit will increase, and it will help for the performance evaluation also. Performance evaluation. If performance evaluation, it will help in the performance evaluation. We can say it will help in performance evaluation. Acha ji. Now sir, how to calculate the transfer price? How to calculate the transfer price? If you just talk about, there are 3 things. There are first of all 3 things I can say. Understand this. The first one is in methods. Acha, if you talk about methods, again there are methods where we can just divide this into parts like. Please do revise this topic, huh? Once now it is done. The first is market price. That is, the transfer will be done at the market price. The second one will be the cost based or the shared profit, we can say. The second one will be shared profit. Transfer price will be based on the shared profit. When you say what is shared profit, shared profit is nothing but, we can say that division A plus division B, what is the profit which is earned by the company after the product is sold, that profit will be divided between A and B, and accordingly transfer price will be decided. So let us say that company ka profit is 10 rupees, it is divided between A and B, let us 5 rupees, 5 rupees. So division A will say my cost is 10 plus profit share is my 5, so I will sell it for 15 to division B karke. That is a shared profit method. Or there can be cost based method also. This the third part can be cost based, or the fourth is negotiation based. That is these divisions will negotiate with each other as to what should be the transfer price karke. Okay, so yeah, this is the small idea which is given to you. Now after that, I can say the range. How to calculate the transfer price range? If you want to calculate the transfer price range, understand the discussion will be again further divided into 2 parts. That is the transferor and transferee. That is, let us say division A and division B. A is transferor and B is transferee. So division A will say I need my variable cost plus opportunity cost if there is any. Acha, opportunity cost will come when? This will come only when, tell me, there is a spare capacity, or when the division is operating at full capacity. When opportunity cost will come? When it has spare capacity or when it is operating at full capacity. If it operates at full capacity. Okay, then opportunity cost will come into play. Okay, now if I talk about the B, that is a transferee division. Division B will say I will pay you lower of the following. So lower of 1, that is outside purchase price. That is this X, because see, if I am getting a product, see, the price which is paid by him is minimum. He will say minimum I want this much, and division B will say maximum I can pay you this much, I cannot pay you beyond this karke. See, as a buyer you will say this is my budget, I cannot pay you more than this. As a seller you will say I cannot sell below this karke when we buy and sell. Now when you say division B, when you are division B, you will say sir, this is if market, in the market only I am getting for 10 rupees per unit, why the hell I will pay you more than 10? Sir, I can get it from the market for 10, I won't pay you more than this as a 10. That is outside purchase price. Or B, selling price minus own cost. This is known as actually net marginal revenue. Whatever we have done written, that is known as net marginal revenue. Net marginal revenue, lower of this karke, that is known as net marginal revenue. That is the selling price minus the own cost. It is like this. See, if I just talk about division B, there are two costs, own cost and internal purchase cost. When it is purchase input cost, which is known as, then you get your selling price karke. Now I hope you understand, if your product is sold for 15 in the market and your own cost is 10, no matter what happens you will never pay more than 5 rupees, because if you pay 5 rupees it is a break even, no profit no loss situation. If it is 4, then only you are earning profit of 1 karke, then your cost is 14 and you are selling it for 15. So no matter what happens in your life you will never pay more than 5. How did you get this? Selling price minus own cost. So no matter what happens in your life you will never pay this. Say like this is 10 now, this is 5, let us say this is 3, so you will never pay more than 7. Tell me, if the market price is 5, will you pay more than 5, or what is your maximum? Will you say 5 or 7? You will say 5. Why? Even though my net marginal revenue is 7, but in the market I can get a product for rupees 5, so why the hell I will pay you more than 5? I will pay you max 5, I will never pay you more than 5. But suppose in the market the product is available for 8 rupees. Now what will you say, 8 or 7? You will say 7. You will say I don't care at what price it is available in the market, but still I can't pay you at above 7. Why? Because if I pay you above 7, let us say 8, what is going to happen? Sir, my input cost will be 8, my own cost will be 3, my cost will become 11 and I am selling it for 10. Doesn't make any sense. So I can never pay you more than this. That is a limit karke. So yeah, you will always select lower, whichever is lower. Okay. So now lower of this karke. Now if I talk about the preferred method, selection, range ke baad select preferred method. If I just talk about the preferred method, understand this. The preferred method will be the 3 divisions. Let us say there is division A, division B, division C. Okay, so if there are 3 divisions, these are divisions. As a division A, tell me which method you will select. The method in which, see, for division A it is always revenue, it is like a transferor. Okay, so because it is transferor and it is transferee, I hope this will select that method where the revenue, transfer price, where transfer price is higher. Transfer price is higher because transfer price is a revenue, because it is selling it. So where there is a higher revenue or a higher transfer price, division A will always select that method where the transfer price is higher. As a division C, I hope you understand, division C is going to purchase. Here it is transferor and here it is transferee. So I hope you understand, as a transferee, if you are a division C, you will have to purchase. So you will always select that method where transfer price is lower, because transfer price is like a cost for you, it is an input cost for you. So you will select that method where the input cost is lowest. Where the cost is lowest, any method by which transfer price is lowest, you will always go for that method where transfer price is lower. But as a division B, you will select where there is increase, value addition is higher. Value addition is higher. Where value addition is higher. You will say how to calculate value addition. So value addition is nothing but revenue minus input cost. Revenue बोलेगा तो this is known as revenue. When it is selling through this division, we can say for this division it is revenue, and when this is purchasing from earlier division, it is the input cost. So any method in which the difference of these two is higher, that becomes the value addition for this B, so it will select that. Okay, now if I just talk about the method, how now in this case, again, once you calculate that, again I can just divide few parts over here, like there are two more parts which are there. One is behavioral consequences. Behavioral consequences. And then I can say that limiting factor or constraints. Behavioral consequences and limiting factor, we can say. These are the questions which can be asked. Acha, I can just tell you, if there are behavioral consequences, there are two. Acha, as and when there is a jhagda, we did one question which took around 2 hours, okay, to solve. As and when there is a jhagda, when there is a like conflict between departments, we just arrive at one method. Do you remember that two-part pricing karke? Two-part pricing system. Are we say na ki variable cost plus fixed cost. There was one case study question, if you remember, that took 2 hours, in which when there was a conflict, we came to this two-part pricing system, or there can be a dual rate system also. Dual rate means what? I will tell you what is a dual rate karke. I can tell you one thing, what is a dual rate. Understand this. There is division A, there is division B. From the company's point of view, it is preferable that division A should transfer to division B. It is preferable. From the company's point of view, transfer is better for the company. Transfer, yes, company says yes, division says no. Now what to do karke? Division says we do not agree to transfer goods internally, but company, it is in the benefit of the company. So company will come into the dual rate. Dual rate matlab, company will say, for you there is a different transfer pricing, we will evaluate, and for you it is different. For you we will keep the transfer price of 10, and for you, let us say, we will keep the transfer price of 80. That is okay, 80 for the performance evaluation. As from the company's point of view, it is no revenue, no cost. So we will say just a accounting purpose, just to motivate you guys, so that you feel motivated. Instead of this, we will say 100 is your transfer price and this is your 80. Two different prices will be kept, so that these managers are not feeling demotivated karke when performance is evaluated. That is dual rate. Or there is a two-part pricing where the transfer price is divided between variable cost and fixed cost. I can give you that idea. ये वेरिएबल और फिक्स वाला ना, वी डिड इट. वो तो कहीं पे तो वो बड़ा सा समरी शुड बी देयर. क्वेश्चन 16 इट वाज. देखो, there was one department, training, consultant and customer support and all karke, and in that case, see, we can see there was a two-part pricing system which came to rescue. We have just divided our price. See, two-part pricing system, we did that. So our entire price was divided, cost was divided between variable and fixed, and accordingly the pricing was kept, fixed cost and variable cost. That is a two-part pricing system. So that was done. And last May there is an international transfer pricing. If I just talk about international transfer pricing, that is international transfer pricing. International transfer pricing. Tell me, generally, tell me here, change in transfer pricing leads to change in profit of company. This statement is right or wrong? Tell me. In case of international transfer pricing, change in transfer pricing leads to change in profit of the company. This statement is right. Generally, if you talk about internal transfer pricing, there is no change in the profit of the company, because there is division A, there is division B. For one division it is revenue, so for another division it is input cost. So internally, no matter what figures you change, these are being cancelled. But if this division is in India, another is in UK. So there is a possibility tax rates are different, guys, and because the tax rates are different, if the revenue changes like country wise, so tax rate will be different, so it is going to impact. So therefore we have solved, I think question number 17 se leke I think 17 or 18, I don't exactly remember, 17 or 18 I think, till question number 21. These are the questions for international transfer pricing which were completed in 2 hours, all the questions. So that is the wholesome summary, we can say that, which is prepared karke. That is how the chapter is divided. Now today we solved this questions, limiting factor wale, where there is a demand was a limiting factor, ours was limiting factor. So then when there is a limiting factor, we always go for this, there is opportunity cost that will come, and if limiting factor is there, always you need to go for that ranking and then you will start production. That's it. So we can say that was a quick summary within 15 minutes or 16 minutes we can say, which we did.